Can the value of mutual fund go to zero? Come, let's do a detailed analysis in this video. In fixed deposits, there is a factor called safety of principal, and that is why many investors prefer fixed deposits over mutual funds. Because in mutual funds, there is a possibility that your principal can go down. Suppose if you invest 1 lakh in mutual funds, it can be debt fund, equity fund, there is a possibility that your value might decrease. But at the same time, it can also fetch you inflation beating returns. We all know that by investing in equity mutual fund, we can get inflation beating returns. But we should also not forget that the value of the mutual fund can get depreciated and become zero. Suppose if you are investing 1 lakh in a chosen mutual fund scheme, before thinking whether this 1 lakh become 2 lakhs, you are much bothered about the fact that whether my 1 lakh will become zero. This is the question all of us have in our minds, right? Let's clarify this. There are many financial companies where they cheat the investors. Can mutual funds also do the same? Is there a possibility for this to happen? We can firmly say that there is no possibility of these kind of incidents in mutual funds. In 1998, many finance companies got collapsed. For example, Vyabara Benefit Fund, Arvarpet Benefit Fund, and the investors who invested in these funds didn't even receive 1 rupee return. Is there a possibility of mutual fund investors experiencing similar situation? The answer is no. The reason why I am able to give assurance to mutual fund is because of the regulations laid out by SEBI. These regulations need to be followed by mutual funds irrespective of their current status. Be it a new mutual fund, an existing mutual fund, or a mutual fund that is going to get closed. All of them have to follow SEBI regulations. SEBI organization works to protect the interest of the investors. On this basis, I can assure you that nobody is going to steal your money in mutual fund. Suppose if you are investing in debt or equity funds, all your investments are getting invested in debt and equity securities. These securities are under mutual fund company and these securities are held by custodians. SEBI has laid out stringent rules for these custodians to protect the interest of the investors. So there is no possibility of anybody stealing your money. Let's analyze whether the mutual fund can go to zero from a different perspective. We should understand that mutual fund is a pipeline for our investments. For example, if you are investing in debt or equity, it collects money from a pool of investors and invests in debt and equity securities. If by any chance, if all the securities go down tremendously, then the mutual fund value can go to zero. But even here, there is SEBI regulations to prevent this. They do this by allowing a particular amount in a particular investment. There is a predetermined percentage of AUM exposure in particular securities. And also only this percentage of exposure can be given to a particular sector. There is also a maximum limit that a mutual fund can invest in a company's capital. These are the regulations that prevent your mutual fund value from going to zero. Any mutual fund invests in minimum 10 to 20 securities. We can consider 20 securities as a reasonable diversification. If you take the case of equity mutual funds, they also invest in a minimum 25 stocks or even 40 to 50 stocks as well. In that case, we can be sure that all the stocks cannot go down and become worthless at the same time. Maybe it is possible in 1 or 2 stocks, but it is not possible for all the stocks to become zero at the same time. Similarly, in debt securities, they invest in 20 to 30 securities. It can be in the form of debentures, bonds. The same logic applies here. All the securities cannot go down and become zero. Even 1 or 2 securities becoming zero is rare in debt securities. So can all the mutual funds go down to zero at the same time? In theory, yes. But if you look at it in a practical perspective, it is extremely rare and it is very, very remote. The structure, the management style which has diversification as an inbuilt feature ensures that this won't happen. Your mutual fund will not go down to zero. SEBI has tried its level best to make mutual funds an investor friendly product so that they can invest in it without worrying their investments will turn to zero.
Are you in search of a
personal guide who can remove the stress of handling your finances, then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.